Priya, Guha, Maxim, Romain, Peter, Pham, and our great moderator, Ingrid Lunden. Please make a big round of applause. Here we go. Check.
Hey everybody, how you doing? Thanks for coming and staying and hanging out with us. Okay. So we've got a great panel here. You guys can all hear me, right? Excellent. Okay. Thanks for joining. And we're here to talk about my favorite animal. What's your favorite animal?
I don't know. Wolf.
I think we're supposed to say unicorn.
That's
I
not
think
the
you're supposed to
topic.
say unicorn.
Hey, Jesse.
Wolf.
Ooh, am I still on?
Okay, wolf is fine.
Sorry about that.
It's okay. It's the new unicorn is a wolf. Okay, so we're here to talk about unicorns. Does everyone know what a unicorn is? In the tech parlance. Okay, Peter, tell us what a unicorn is.
It'd be a company, hopefully either sold for
Really
a company that's sold for $1 billion or valued at $1 billion more from a bunch of investors.
Yes, that's right.
$1 billion.
Oh, cheers! Thank you. Yeah, excellent. And thank you. So you guys are here to talk about them. What is your opinion on unicorns?
Peter, I have an incubator called Science out in LA. So we sold one called Dollar Shave Club. You know, we started that and we sold it for $1 billion in cash. But interesting enough, when we raised the round about 6 months prior to that, we had the option of either raising at that valuation. I think it does send some signals and some traps for a lot of entrepreneurs that the valuation is a hurdle. So you'll see a lot of companies raising at that valuation and then kind of getting stuck and not being able to sell for that. So we just got another one announced yesterday on TechCrunch. We had a company called Dog Vacay that we started that merged with Rover. We just raised, and according to the journal, I will not say it's right, but we raised that $970 million valuation, just like not to hit the billion.
I mean, it's a really funny thing. So at TechCrunch, it's very much a marker, and some people, really see it that way. I don't know if it's such a healthy thing. Always.
So
Priya.
I think, the concept of a unicorn is, I think, a bit of a holy grail for European startups in particular. For good reason, because it is an indication of the growth and strength of the European tech ecosystem. And we are doing really well. I think we have 58 unicorns now in Europe, 22 of those in the UK, others spread around the whole of Europe. And I think that's a fantastic testament to where the European tech ecosystem is. But as Peter said, I think it can become a bit of an obsession. And I think it's not necessarily the right path for everybody. And we don't want to lose sight of the people who are just behind that as well, who are also growing amazing companies and putting a lot back economically into all of our countries.
Yeah, I do agree. But what do you guys think, Maëva?
Yeah, adding on this, unicorns, first, it's not real animal, like it doesn't exist. So it's quite strange to be looking to look like something that doesn't exist. But the big topic in France is to grow startups. It's not even to become a unicorn, it's just to become bigger. Like we have a figure, it's like 5% of the startup have less than 10 employees. So it's very small. And that's why we gathered. So I'm representing La Boussole here, the compass. And we are gathering accelerators and incubators and corporate incubators in order to be able to help startups to grow from ideation to creation to scaling and to expansion. Because the most important thing is how do we grow startups even if they don't become like huge.
Maxim, you guys are a unicorn. I have to say, I'm going to interrupt myself. I think the whole unicorn thing is rather cheesy, and I personally feel like it's a weird metric to measure a company. If they're doing well, that's wonderful. If they're not, okay, we need to talk about that too. But it becomes this certain way of placing yourself on the map. Would you say?
Yeah. I think it's a way to achieve actually your goals. You become a unicorn. It's a way to raise money and essentially to invest. So if you take the case of OFO, we need to buy a lot of assets. We need to buy a lot of bikes. We have currently about, I think, 14 million bikes operating in the world. And I think we can do
14
that.
or 40?
14 million.
Yeah.
We can do that only if we are able actually to invest in these bikes. And to do that, obviously reaching the status of unicorn is pretty useful.
I think the more capital-intensive companies, the Ubers of the world, will end up going just that way simply because they do have to raise more, because they have assets they have to do. Peter, were you going to say something?
It is a vanity metric, but although I would say for markets, so whether it's Europe or San Francisco, for LA, we're in LA, it does help recruit and help kind of convince either investors and entrepreneurs that it can happen. So if you look at this last 6 years in LA for us, Snapchat going public was a really big deal. Dollar Shave Club selling for $1 billion. I was lucky enough to be an angel investor in Ring, which we just sold to Amazon for a little over $1 billion. And so once you start having these things, the entrepreneurs say, well, maybe I can do it, right? And then you get funding and investors to kind of start investing in the ecosystem. And that's probably the biggest positive of it, where you get recruiting and you get entrepreneurs and you get funding.
Yeah, I think the other thing is usually when you start as a startup, even if you are a unicorn, you don't have great financials, right? So reaching the status of a unicorn is a way to attract the interest from a lot of partners. So suddenly you have suppliers, you have companies that are willing to invest because they see the potential that you have. That's pretty important also.
Yeah, I think people tend to use it as a sort of mark of, like an insurance market, a guarantee of some kind. That obviously that's totally not even true, as you know. When you're an investor, the bottom can just fall out of these things. But one thing that's kind of interesting, there's a kind of theme here, if I could make it a theme, is that everyone on this stage lives outside of the Valley. And I mean, some of you have definitely worked there and lived there at other times, but your businesses are, essentially either founded outside, obviously you're very far from the Valley, not just the Parisian outpost, but, originally OFO's origins. But I know that you guys with Science have had a couple of big hits now outside of the Valley, being in Southern California, but do you feel that you're seeing a shift as more tech centers grow and arise outside of the Bay Area and a little south of that we're getting more unicorns in more places? Is that, are you seeing, unicorn or just in general valuation, are you able to grow companies outside of the Valley? So to get to the unicorn stage, whatever that might be, the growth of a company, beyond being a small company, to incubate it and then to grow it big, is that improving outside of the Valley? Anybody answer that? Anyone?
Yeah, there are more and more late support for startup. So there was, for instance, in France, we had a lot of help for the early stage, so to emerge new startup, but you have more and more organizations that are helping startup to grow and to expand in new markets. We have also in Europe much more strong tech organization that help startups to grow on the European markets. That's really the key thing, is to be able to go in new markets and to grow and not only emerge at the beginning. That's something that is growing here.
I saw a story just the other day in the New York Times about how France, despite a lot of the money being poured into the country, is still not really very good at growing startups. Yes, you've got like Criteo. There have been a few that have come out of France, but generally speaking, it's hard to grow companies here. Would you say? Would you agree with that?
If it's hard to grow a company in France?
Yeah.
I think there's less...
I'm talking about companies to raise Series B, Series D, Series E to get to those unicorn valuations or whatever.
Yeah, from a perspective at least, I think there's first a lot less money available in Europe, but also in France. In the US, it's very clear that you have a lot more investors, and especially if you talk about C-series funding, there's just a lot more. So that makes it first much more difficult in Europe. And second, I think the market itself is much more difficult because you have to, the US is one big market. In Europe, if you want to become big, you have to go to France first, then you have to go to another country, you have to deal with another marketing with another language, and that makes it a lot harder to scale, actually.
I mean, Peter, it's quite interesting. I'm sorry, 1 second, Priya. That Dollar Shave Club didn't even really expand to outside of the States when it did its big boom exit, right?
Yeah, we only had it in the U.S. I think for us, 6.5, we started Science 6.5 years ago. It was a dearth of investors, but then if you kind of look at the ecosystem in LA, again, Snapchat was, I think, one of the core pieces of that. 400 engineers have been recruited. Almost every venture firm, there's 100 flights a day between the Bay Area and LA. So think about that, 100 flights. Every 15 to 20 minutes you can get up and down. That's a big piece of it. Our portfolio, we've raised almost $700 million. 95% of that came from the Bay Area. So a lot of it's money. If you look at what's happening in the Bay Area, salaries are insane. Like the engineers, $120,000, $150,000 starting salaries. They're getting recruited by everybody, Facebook, Dropbox, Square. You have every decacorn based in the Bay Area who will overpay every single engineer on the planet. And so retaining entrepreneurs, retaining engineers, and then living costs. Like it is just so expensive. So for us in LA, what's been nice is a lot of people move back to LA. Either they went to UCLA, they went to USC, they went to Like there's a lot of schools and they've kind of moved back. It's cheaper to live, it's cheaper to recruit, and it turns out talent and funding is there now. It just took a long time to get there. Any other places, whether it's here in Paris, it'll eventually happen, but you definitely need a ton of investors. I think if I look around every market, New York's starting to see that, it's funding, 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 funding.
So I was just going to maybe break the theme on the table, because actually ROCKETSPACE is a San Francisco HQ'd company. What we did is something slightly different, which is we took the model that had worked really well for us in San Francisco. We're a late-stage technology campus. So we've had about 18 unicorns through our doors in San Francisco. And we took the model that worked for us.
You want to name one or two of them?
Blipper, Spotify, Hootsuite,
right.
Supercell.
So you're saying when Spotify went to the States, they started out in ROCKETSPACE?
Exactly.
Right.
And I think
in New York or?
In San Francisco.
Okay, got it.
Yeah, we're only in San Francisco in the US. And I think the reason I mentioned that is because I think, whilst we should rightly sort of look to other ecosystems, there's also stuff that the Bay Area has done well that we can replicate. And that's what we're trying to do with our brand new London campus that we opened about a year ago. To your point, though, about investment, I think investment is really key. Maxim, I agree with you. I think that is changing. I mean, in the UK, we had about $2.5 billion of VC investment last year. We had over $1 billion this year.
There is
so
a lot of
invested.
money in London.
And I think that really changes the possibility of growing companies at scale.
And maybe to add on, for us in France and in Europe, it's not only the question of money, but it's a question of support. If you look in France, we have more than 400 incubators and accelerators. That's like a lot. For entrepreneurs, it's a hell in order to know who is the right person to help him. And also to understand that...
Or if you even need to go to any of them, by the way.
Sorry?
I mean, you don't have to go to an incubator or an accelerator. There's no rule that says you have to.
There is no rule.
Sorry to say.
Of course. There is no rule. Only in the US there is a study saying that you have twice a chance to be successful if you are supported. But the thing is that you have so many structures that are trying to help entrepreneurs. Entrepreneurs, they don't know who to look for, and they don't understand maybe that there is someone at each stage. So that's why what we did with La Boussole, Compass, we tried to map all the actors in France and to dedicate them to each stage. So we did 5 stages: ideation, creation, seed, scaling, and expansion. And we try really to make this matching because we believe that there is the support necessary for entrepreneurs, but they need to find the right person.
Peter, I know that you guys, I think of science very much as an LA outfit. You sort of... I don't know. Yeah, I identify just as I would identify YC with Silicon Valley or whatever.
The weather's better.
One of those things. However, there's clearly an opportunity. You can find like analogous ecosystems to the one in LA and potentially expand to it. You were saying backstage, you guys eyed up France. We're going to make some news here? You're going to...
No. France...
What are you going to...
Where
are you guys? Yeah,
we've considered opening offices in different places of the world. Paris, we've been, engineering here is amazing here. One of the things we were talking backstage is I can't fire people here, apparently. And, part of a startup is it's not working. You're not
We are
very
not
good.
talking about you guys.
Yeah. And it's a fluid system the way we operate, and we only work on probably 8 startups at any given time in our offices, and it's intense every single day. And it turns out we fire a lot of people. We also hire a lot of people. And
But wait a minute, are you telling me that the companies that you're incubating, you're talking about really interesting, very big potential for scaling businesses. Are you saying science is unable to scale?
No, we have 3 of the top 100 apps in the U.S. App Store right now.
Yeah. No, I'm talking about science.
In terms
you guys.
look,
Yeah.
money solves all problems. It is true. Like, money solves all the problems. And I think it's just whether or not kind of getting capital at different places. We'd love to. I think.
So where would you go first, do you think? Somewhere else in the U.S. or possibly in Europe?
No, possibly
or?
international. Again, it's whether or not the dollar. For me, it's not just funding science, millions of dollars. It's, is there follow-on capital, right? I can't emphasize
totally.
enough when, for us, it was raising round after round after round. With not having that ecosystem, it's really, really hard.
Yeah.
I'm talking, just us, we're a small outfit. $700 million for our startups in the last 6 years. So I'd have to think about a market that has a dozen funds that have that ability to write that first $1 million, $5 million, $10 million check, and doesn't have that same attitude where a lot of kind of new markets, there's one VC, and that person has a decision process that takes like 4 months.
I'm just going to interrupt us for 1 second and say, if anybody wants to ask a question, to please use Slido and send us one. I don't have any yet, but I'd love to hear.
Can I ask how much has OFO raised?
Yeah, how much has OFO raised?
So, good question.
Thank you, Peter.
I think we raised about 1.5 billion so far.
So like you raised the unicorn within the unicorn.
So what is your valuation now?
It's about 2 billion.
2 billion. Are you guys, you're going to need to raise more though. I mean, the whole bike space is insane, right?
Yeah, I think we think it's a huge market. So the problem we are trying to address is, more and more people live in the cities. The density in cities is increasing. So there's less and less space for cars. And so we are trying to help actually to develop, I would say, eco-friendly mobility that take a lot less space. And so bike is part of it. So if you think about it, 2/3 of the population is in the cities. We want to offer solutions for all these people. So we are talking about billions of people. And so, 14 million bikes seems a lot, but actually the needs, if you take all the big cities in the world, is much, much larger. So we need to find and to make sure, obviously, that we grow in a cost-efficient way, but ultimately we'll need a lot more funding to do bikes or to offer bikes everywhere in Africa, in the Middle East, in Europe, in the US, and maybe do more like e-bikes, e-scooters, and so on.
Do you think, though, so going back to this unicorn theme, do you think that raising all that money and coupled with the fact that you're in a bit of a bubble, you would have to admit that there's a massive alternate transportation bubble going on, especially if you add scooters to the mix. Jesus. So,
I'm an investor in Bird. I love it.
Oh, okay. We like it. We like it up here. We like the bubble. Given all that, though, do you think that the unicorn, the double, the 2 billion, insulates you guys a bit from the fact that there is going to have to be some consolidation down the line, or?
Yeah, I mean, it's already happening, right? So if you take the Chinese market, there were about 30 startups or so in the bike sharing space. Right now, there's probably 2 big that have survived, which are OFO and Mobike, which have about 50% of the market each. And then you have a few small players still surviving, but that's it, So I think it's going to be the same all over the world, except that I think it's not like a Google in the sense that you have assets, and so you are limited by your capacity of investment. So I think it's quite possible that there will be a few big players, not only one big player taking, the whole market.
I mean, it kind of feels like, it's really interesting because I used to think, in the old days, being worth $1 billion felt like you more or less secured for an independent future as an entity. These days, though, today's billion is yesterday's 100 million, right?
Remember,
Am I
raising
right?
money that's preference. That's a preference stack you have to get over.
Yeah.
Like I just remind entrepreneurs, it's funny. I've been lucky on the exit on the billion. I've actually never raised at $1 billion. We've only sold, and so that valuation is it's a vanity thing. But remember, you raise 100 million, 500 million. You have to pay that off first. You as a CEO or entrepreneur, you get nothing. Preference goes first. And to the point here, I think raising money from the right people is really, really important.
It can be very helpful, right?
And so, I think accelerators, incubators, however you want to call it, or just the network, I think it is important to kind of think about who you're raising money from. Do they have access, particularly when you're in secondary and tertiary markets? Do they have the Rolodex to help you get to the next round? And I think, I think they do a great job at that.
Is there a question? Are there questions? Oh my God, I've been staring at this. Holy crap. Okay, here we go. Excellent. Oh, and there's none coming up here. I'm so sorry. Right. Blockchain. Sorry. Okay, let's see. What blockchain? I'd love to hear more. Give me 3 practical tips.
La Boussole?
Yeah. Let's see. Can I just ask a question that's not any of those very quickly? I'm so sorry, and then we'll go to those. Do you think, knowing everything that you guys do, I mean, you're essentially representing incubators, accelerators, but you yourself, you're a startup essentially. You're a startup. You've been an entrepreneur
We are a
and
startup.
an
We're actually a
incubator.
company.
You are incubator, accelerator. Do you think that do you think we're no longer in the world of, can you still have a bootstrapped unicorn? Can you still build a company without any of this? Do we need you guys? Could you have done OFO without this?
You mean without external funding?
Yeah, without external funding.
I think OFO no, but the previous company I worked for, which is Wayfair, which I was heading in Europe, we grew for 10 years actually without any external funding, so just funding our growth ourselves. But that depends if you are asset-based or not. If you are heavy asset-based, it's very difficult to grow, I think, without a lot of external funding.
Yeah.
I think for me it's around pace, because clearly bootstrapping is always there as an option, but it will be a slower journey. And I think you lose out on something Peter was talking about earlier, which is the benefits that can come with external investment. And I think the external investment brings a pressure, which is not a bad thing in terms of being able to really, really accelerate the growth of a business. But it also brings insights, value, connections, networks, which are invaluable to really take a startup to a unicorn.
Yeah.
I would say the topic today is also what are the different paths of growth. It's not only by raising funds, you can also do your own turnover, you can grow in different ways. You can look for a unicorn, but I've seen some articles saying you can grow for being a zebra or a cockroach, according to your sustainability, cockroach being an animal that is able to support a nuclear war.
Exactly.
And that's something that is very important, because are unicorns all profitable, and can they really last long?
Yeah, exactly.
And I think we have to discuss this topic.
Yeah, I agree with that. I mean, on that subject, and just assuming that a unicorn doesn't necessarily mean privately funded. It could mean just a company that's grown, depending on the business model. Some might be easier than others. Let's take this question just because it's been most upvoted. Can you give 3 practical tips on turning a small startup into a unicorn? I mean, it's really hard. I think it's a tough question because it really depends on the industry, right?
I work on consumer.
Let's say for a consumer
Number
business.
1, luck.
Luck,
honestly. Look, if you look at the most products in the companies today, they were probably tried 5 years ago, 10 years ago. Timing is a big piece of it. Find the right team, find the right investors, and there's just going to be inflection points that create massive growth. And the revisionist history will always be different. Like if you look at most unicorns today, they'll have a different origin story. But if you really were there from day one, you had no idea. Build a great product for your users. Ideally generate revenue, most of the things we focus on, and build a real business.
I would say be down to earth, step by step. You can maybe have your head to the unicorns, but your feet needs to be on the ground, and you need to go on every stage before going to be big.
So mine is just one piece of advice, which I think is the best advice I've ever heard, which is design your company to be global from day one. So don't design your company to tackle one market, design your company to be able to tackle every single international market.
Which basically means sometimes rethinking even what it is that you're doing, I suppose. Yeah, that's interesting. Do you have anything to say?
I think a pretty aligned with Peter. I think in the end is focus on the product. If you have a product, a simple product that sells itself, then you have a big company. Yeah. And I think for instance for OFO, what makes me confident is we just launched a business in Berlin at the beginning of the month. We put the bags in the streets. Everyone started to use it without us doing any marketing. And so then okay, you have a product that sells by itself. And I think you take all the big companies, it's the same. They have a product that everyone wants to use.
That's interesting. I know you were saying make sure you're generating revenue, but do you think that it's quite interesting because we still have, I would say it's a really, really fundamental aspect of startups that we cover at TechCrunch, not a necessary, but definitely something that happens, is that a lot of them are very unprofitable. And they say, oh, but we're growing. It's always that, oh, but we're growing. That's why we're unprofitable. Do you think we're ever going to see that shift away from that? Or do you think that's going to remain a part of the
I think it goes back to who's in your support structure. Do you have investors that are going to be okay with that for a very long time? I think being in LA, we've kind of always had this bootstrap, make money mentality. The next round of financing might not be there. So let's build a model where growth does cause maybe a loss, but if we ran out of marketing dollars, it's a real business. So that again, that's our bias, not everyone else, because I just don't believe there's just going to be an unlimited amount of money thrown into something.
Okay. Thank you so much, you guys.